Hello, I'm Carolyn Herbert from the Finance News Network, and joining me from Hunter Hall International is Interim CEO Peter Hall. Peter, welcome to FNN.
Great to be here, Carolyn.
Now, Peter, last year was pretty interesting for investors. How do you feel about the performance of Hunter Hall funds for the year ended 31 December 2015?
I feel we did pretty well. Our two largest funds did beat their benchmark and provided reasonable performance. So the Value Growth Trust was up 16%, and our listed investment company, Hunter Hall Global Value, was up 12%. Global Value, we've just announced a 3-cent fully franked dividend today, and that company is setting up a nice trend of increasing dividends. So that's very nice. We've been paying dividends for a couple of years now, so I hope that we can continue doing that. Some of our smaller funds also did very well. Our Australian Value Trust was up 27%, and the Australian Equity Fund, which is sort of an institutional offering, was up 22%, and that's pretty good in the context of the market, the Australian market, which was up about 4.5%. And then we have this other fund which we launched last year called the High Conviction Trust, which actually was the best performing fund in Australia over the year to December, and I think was the 50th best performing fund in the whole world. It generated a return of around 100% over the year, and that's a fund that's basically, as it describes, is a very high conviction fund, so highly concentrated portfolio. Some describe it as Peter Hall Unchained, and which means it has very little in the way of constraints. The only constraint it has is that no more than 15% of the fund's assets can be invested in any one situation. And we had a fabulous win in a company called St. Barbara, which is a gold mining company, which we first identified at 7 cents and is trading at around $1.70 today. And we bought 15% of that company, and I think we paid 13 cents for that 13 cents a share for that 15% holding. And we put a chunk of that into that conviction fund. So we had a really good year. I think St. Barbara was up 1,257% in the year. So that was a good win.
So Peter, what's the split between local and international shares, and has this changed much over the year?
For our global funds, which is the Value Growth Trust and the listed investment company Global Value Limited, we've got about 30 to 33% in Australian shares, and then the rest in international shares. In both those funds, we actually have quite a high cash weighting, about 22% roughly in each fund. So, the balance is probably about sub 50% in global shares there. And the reason why that is because for many, many years we have found fantastic bargains in Australia, and often those bargains are companies which really sell into international markets or have assets in international markets. So it's a bit of a misnomer to call them Australian shares. So Certex, 90% of its sales happen outside Australia. That's a liver cancer company where we bought in at $3.64, I think, was our in price. They're now sort of between $35 and $40 a share. And so we really like Australian companies, and we really like the governance here. We like the business culture. And Australia is a great haven of security in this world. And we are coming into this period of very difficult, volatile times with great events happening across the world, and it's really nice to have a chunk of our money in Australia. So that's sort of basically behind it, the reason why we have such a high Australian weighting.
And finally, Peter, given the market volatility over the past 6 to 12 months, and especially with what we're seeing right now, how do you feel about investing in the market at the moment?
I think we're entering a very, very interesting phase that's going to last for 2 or 3 years. Which is basically an adjustment to the excesses of the last 6 or 7 years. Entering into this phase, we feel we're very well positioned. We've got 20 to 25% in cash across our funds. We've got 10 to 15% in various gold stocks, and we've got our big exposure to Australia, which I regard as a very defensive economy and a very defensive market. Yes, there are all the resource stocks which are being accrued and punished. But Australia as a country is very well positioned. We've got a low sovereign debt, a low national debt compared to everyone else. We've got real interest rates, so we haven't jammed our rates down as lots of other places have done. And I think we've got a government stability. I think Malcolm Turnbull will be a great Prime Minister, and so we've got a solid, steady, professional hand on the helm. So I think we were in a really good place. So I'm really pleased we've sort of got 30 to 33% of the fund in Australia. So it's about as defensive as you can get and still be in the game.
Peter Hall, thank you for the update on Hunter Hall.
Thank you very much, Caroline. It's been a great pleasure.